Hey guys, welcome back. In today's video, we are talking about why AMC is incredibly undervalued, how AMC can be worth 900 billion, Citadel selling to pay, and many more in this video. First, we're taking a look at this. Quadrature Capital just increased their AMC position by 261%. While some scream dead stock, institutionally quietly low. So what we are seeing is another major increase in the ownership of AMC by another institution. And what we have seen is that recently we've been seeing massive increases in ownership. We're looking at 261.45% for Quadrature. We've seen multiple other firms increase their holdings of AMC by over 100%, 200%, and even more than their existing ownership. And typically, these are worth up into the millions, if not tens of millions of shares, like we have seen with UBS and others. Now, there's a big reason for why this is happening. Ultimately, it goes to talk about how undervalued AMC is. When you take a look at what Robert Citron has said, he talks about how AMC is incredibly undervalued at these prices. Now, Robert Citron is part of Discovery Capital, something that we've talked about in the past. And it just goes on to show how people are realizing the opportunities there are with AMC. And it's what we've said that even when you don't include the squeeze price of AMC, AMC is still a stock that will return greatly. It's a stock that should be in the hundreds. And if we are able to see real price discovery, if we're talking about a completely fair market, how it can easily push it into the thousands, not because of the squeeze, but because of how much volume and momentum and sentiment is actually behind AMC. But even if we don't talk about it going today, even if we understand where AMC is at right now, which we see with the price of $1.20, and you compare it with its competitors, you compare it with the fundamentals that it has and where it's projected to be and its future projections, you see how AMC can easily return 10s and 20s, if not even higher, of return with any capital at a short amount of time. And that's why institutions want to buy into AMC right now, because they realize just how much money can be made by buying into AMC. And if you take a look at it over here, the probability of healthy finances of a company and its market cap correlate on the fair market. Much can be said about Robert Citron, but it's hard to deny AMC is incredibly undervalued, where its market cap is on par with December 20 after 9 months of COVID lockdown. And so what we are looking at right now is AMC's market cap is comparable to a time where it was completely shut down of business during lockdown. And so we already understand how ridiculous that is. So if AMC was to be worth around this much when it had no business operating, when it had to only use the money it's borrowed to make sure that everything is able to stay afloat, you talk about how AMC is at right now, with how much investments they've made, with how much they restructured, with how they're improving the operations, you realize that even a simple comparison just shows what's actually going on behind the scenes. It shows where AMC should really be and where it should definitely not be. And this is what we've said with how multiple people are realizing. And the fact that it comes out to a head of an institution to actually talk about AMC's undervaluation, as opposed to what these media articles are saying about staying away from AMC, it really goes to show what is actually happening behind the scenes. And then we can even see over here. Firstly, we are looking at Michael Burry talking about his target market cap targets for GME, which he talked about is $1 trillion. Now, this is what we've said with where AMC, where GME could be, and how this could obviously be easily accelerated. And we talked about how this is possible when you understand how much money is behind this. You can see AMC 900 billion market cap, 1751, so $1,751 per share after MOAS. After 5 years, I believe there is $2 trillion of hidden liquidity in swaps on AMCs that needs to be unwound. AMC would have tons of cash on hand from the unwinding. And when we talk about everything that's going on, something else that we'll talk about later on as well that will make sense as well, is just to talk about the positions that are behind AMC. So we started this video off by saying how undervalued AMC is. And this is talking about just on the fundamentals and just on the comparisons of where it was during lockdown, we know that AMC is undervalued. And so we already know that AMC will get higher. But behind all of this, you have to realize another big reason for why AMC is at its current low price. It isn't just because people don't realize that AMC is undervalued and therefore we're not priced in. It's because of the countless manipulation that has brought AMC to its current price. Now, behind these manipulations hides swaps, hides tokens, hides FTDs, hides options, hides everything that we have mentioned in the past before. And that easily, it can go up into the hundreds of billions, if not what we talked about here, the trillions, $2 trillion. And now this is what we've seen happen with other firms. This is what we talked about with derivative positions that banks hold, and why it easily contains trillions of AMC and GME positions in there. Now, we've already said the reason why Credit Suisse went bankrupt is because of these very positions, these very toxic swaps of AMC and GME. And is why we're seeing UBS, after inheriting these positions, not only are they struggling, not only are they forced to increase their capital to meet margin requirements, but they've also bought over 20 million shares of AMC to combat what's going on with the swaps. And it just goes on to say that this is why we can easily see AMC at a $900 billion market cap. And UBS isn't the only firms getting involved and being affected. Because if you take a look at it here, $1 billion capital raise. Citadel, the hedge fund manager founded by Ken Griffin, sold $1 billion of high-graded bonds to fund a payout to its owners. So what we've seen here is the fact that Citadel, the firm who is famous and has been talking about making record profits, having the fact that they need to sell bonds to raise money to pay their investors. Now, the reason why this is interesting is because they have made tens of billions of dollars of profit, yet they are unable to unwind and liquidate these positions. And the fact that they are forced to actually sell these bonds to pay out, it just goes on to say what's actually happening. And one of the things we've also seen is how Citadel has increased their position in AMC recently as well. You can see the investigation Citadel doesn't want published. This is not how healthy hedge funds behave. This is how distressed companies manage liquidity crisis. What positions are so illiquid or underwater that a $67 billion fund cannot internally generate $2.25 billion in cash in 13 months? So Zero Outlets published analysts questioning why $67 billion fund required BBB rated public bonds for owner distributions. Now, the contrast is when GameStop issued a $4.2 billion in convertible bond at zero interest in 2025, coverage focused on skepticism. But when Citadel does it, there is minimum coverage and no one is talking about the seriousness behind this. So what we first can talk about is the fact that Citadel needs to sell these things to raise money. So we are realizing that they are lacking money. But then it goes beyond that, because if we already are realizing that they are illiquid on their positions, or rather their cash, it means that their positions are so illiquid as well that they can't raise cash. And so what positions are so illiquid? Well, it could be the hundreds of billions of synthetic shares of AMC, the countless synthetic shorts that they've created that are supposedly in profit, but they cannot cover. And this is what we're looking at right now. The fact that they are unable to pay their investors. And so this is what we've said with how shorts never covered and why shorts need us to sell our shares for them to get out of this position. And you can see the OBV also shows that nobody sold. And this is what we're looking at with AMC. And we've shown the OBV in the past before, but I think when you also pair this up with what's happening with what Citadel is doing, it goes on to show what's actually happening. It goes on to show that behind the scenes, everything's not as merry as these hedge funds are making it out to be. Now, another thing that we're looking at is the AMC price. So we talked about the manipulation, and one of the things we've been looking at is, of course, the price action. And what we're seeing is how in algo trading, VWAP isn't just an indicator, it's often the goal. And what we talked about with how is that they're trying to obviously push the price down, and they're coordinating this with an ATS. And this is what we're looking at. However, something that we could be, as we're going on along the lines of the technical analysis, is that a great start for Monday will be an exhaustion gap down to 113 area and a V bottom here. The consolidate 113, 180 zone into the March 3rd and 6th, then push off and rip. And so this is what we're looking at. Now, we've always said that technical analysis, when it comes to AMC, it isn't something that we should take it too serious. The reason for this is because, yes, people have made a living trading off of technical analysis, me, myself included, but the fact that AMC is so manipulated, we aren't able to actually understand what's actually happening behind the technical analysis, what's actually happening behind the price action. However, whilst we're talking about that, I do believe in this one thing. Catastrophic near instant release of all stored energy as motion usually in the direction opposite to the original compression force, which is essentially talking about when you hold something up and the energy is building up, when it bursts, it inevitably will have a massive explosion. And this is what we're looking at for AMC. All the suppression that is happening, the very fact that we are seeing a $67 billion fund who can't generate 2.25 billion cash, it shows how much money these guys have used and spent to suppress AMC. But the moment that they can't do this anymore, the moment they aren't able to hold all of this, the energy that will burst out will be massive. And this is why we've said AMC can easily be a $900 billion market cap, while we can see it going to $17,000 per share extremely easily. And you also have to realize this. This is a 100% guarantee. If hedge funds and market makers could have taken AMC to 99 cents or $0, they would have years ago. And this is why we've said they've always constantly tried to suppress AMC. Their goal for AMC from the very start has been to bring AMC to zero. The very fact they can't do this just goes off to show that it, firstly, is difficult for them, but secondly, they don't have the money to do so, and they've already spent so much and it's going bad for them. Another thing that we're looking at is this. When they're still closest, watch AMC, and it's essentially talking about the Paramount moves on Warner Bros. And this is something that's very big because we talked about the partnership, we talked about what this meant for the industry, and we talked about how this is just showing that what we're going on right now and what we have projected the future is only going to get bigger. You can also see it's not a glitch but intentional. AMC stock intraday volatility shows unexpected 15 to 25 cent spikes. This action is a typical of VWAP adherence and normal algo trading. And this goes back to what we talked about earlier. And that's why I said that yes, technical analysis pretty much works on anything else out there. But when it comes to AMC, the stock that has seen 80% dark pool, 90% dark pool, it just goes on to show that this is not something that can be used to justify what's happening, because at the end of the day, they are just spending hundreds of billions of dollars to suppress this billion-dollar stock. And that's what we're looking at. Another big thing, and it's why we've said that people are not talking about this as much as they should be, is the very fact that when you take a look at the Netflix insiders, we've got the majority of them who are selling: co-CEO, director, chief financial officer, chief accounting officer, and this is what we're looking at. And the fact that no one is really having this massive coverage. So we're seeing insiders selling Netflix, and then we're seeing people buying AMC. And you start to see where the till is starting to go towards, and what we've talked about with how people are realizing the opportunity is now in the industry that we are in. Something else that could also be is, of course, the catalyst for GME, which we have talked about. And once again, this is something that we've been paying close attention to. Also, institutional investors have sold $8+ billion in stocks last week. And I think that this is a very important thing, because in the midst of all of these selling, they are buying AMC. This is the second largest sale ever, yet we're still seeing filings of buying on AMC. And this just goes on to talk about what we've said with people realizing the potential there is for AMC. Now, another thing to talk about is this. what will happen if regulators force institutions to cover their naked short positions? South Korea, ever since they've aggressively banned naked short selling, take a look at their composite and you can see this massive increase. And this is after they took aggressive action on trying to stop naked short selling. And it just goes on to say really that naked short selling is something that is damaging the market. It's something that's having a massive negative impact. And it isn't something that's actually adjusting to what the market thinks. It's just something that satisfies the benefits, the greed of certain individuals and certain institutions. We're also looking at a $4 billion withdrawal from crypto over the last month, and you can start to see why people are panicking. Once again, amidst all of this, people are still buying into AMC. Once again, goes on to say the safe haven and the projection there is for AMC. We're also looking at how silver miners, how silver has been holding very strong. We're looking at how physical silver stock falls to 88.79 million ounces, down 3.36 million ounces amid supply tightness. And what we're looking at here is for that high growth delivers 55% growth in mineral resources over 500 million silver ounces. So you start to see why we've said that high growth is going to be a massive play as well, and why this is very important for us. Now, as always, known as Financial Advisor, do take advice on your own soul. Make sure you do your own due diligence and research, and I'll catch you guys next time.